Your bank has a department with no official name on the org chart. It doesn't make loans. It doesn't process payments. Its entire job, the only thing it does, is figure out how to legally take more money out of your account. I know that sounds like a conspiracy theory, so I want to show you exactly what I mean. Because once you see the mechanism, you will never look at your bank statement the same way. It's a Tuesday. You've had a long day. You stop at Starbucks, grab a coffee, maybe a sandwich. $14.73. You tap your card. Done. Life goes on. Then you check your bank account that night and you see it. Not -$14, -$50. Because that coffee, that one totally ordinary purchase, triggered a $35 overdraft fee. You effectively paid $49.73 for a latte and a turkey sandwich. And you had $47 in your account before you bought that coffee. But somehow, by the time the bank processed everything, you were broke. Here's the thing nobody tells you. That is not bad luck. That is not a glitch. That is the product working exactly as designed. My name is Nick, and I spend way too much time thinking about the systems banks have built to quietly drain money from ordinary people's accounts and keep it all completely, perfectly, infuriatingly legal. If you're someone who has ever been hit with an overdraft fee and just accepted it as your fault, or if you've ever felt like your bank is somehow always working against you even though you're their customer, make sure you hit that subscribe button and give this video a thumbs up if it helps you out. Because today we're going to talk about how US banks collected $7 billion in overdraft fees in a single year. We're going to talk about exactly how the math works, and we're going to talk about what you can actually do to make sure none of that money is yours. Real quick, before we go any further, I want you to do something right now. Think about the last time you got an overdraft fee. Did you call your bank and ask them to waive it? Because according to CFPB complaint data, if you had called, there's roughly a 50% chance they would have said yes and reversed it on the spot. 50%. Most people just pay it. They assume it's non-negotiable. It's not. We'll come back to that. Let's get into it. $7 billion. Now, I could tell you that number is bigger than the GDP of 30 countries. I could compare it to the national park budget. But honestly, those comparisons don't help, because they keep the number out there, somewhere abstract. Here's the comparison that matters. Are you one of the people it came from? The CFPB broke this down. And here's what the data actually shows. 9% of bank account holders pay 80% of all overdraft fees in the United States. 9%. So this isn't a distributed tax on everyone who banks. It is a targeted extraction from a specific group of people. The profile of that group? Lower income, paycheck to paycheck. One unexpected expense from going negative. In other words, the people getting hit the hardest are the people who can least afford it. Not because they're careless, but because the system was designed to find them. Now you might be thinking, okay, but a $35 fee for going negative, that's in the account agreement. You knew the terms. If you don't want the fee, don't overdraft. That is a completely reasonable thing to think. I thought it for years. But here's what I didn't know, and here's what most people watching this don't know. You can follow every rule and still get hit, not because of bad luck, because of something banks do called transaction reordering. And this is where it gets really interesting. And by the way, before I show you the math, I want you to know something that took me a while to accept. Everything I'm about to describe is in your account agreement. The bank disclosed it. You agreed to it when you opened the account. It's on page 31 of a 47-page document written in 8-point font. That document is technically legal. It is not technically readable, and that distinction is the entire business model. Let me show you exactly how this works. I want you to really follow the math here because it's going to make you genuinely angry. Let's say it's Monday. You start the day with $100 in your account. Throughout the day, you make 4 purchases. Morning coffee, $4. Gas station fill-up, $45. Lunch, $12. Groceries, $48. Add those up, $109. You spent $9 more than you had, so you're going to overdraft. That part's on you, fair enough. Now here's the question. How many overdraft fees should you owe? Logically, basic common sense logic, you went negative on the last purchase. The groceries pushed you over. One fee, $35. But that's not what happens. Many banks use a practice called high to low transaction reordering. Even though you made those purchases in that order throughout the day, the bank processes them largest to smallest. So instead of $4, $45, $12, $48, they process it $48, $45, $12, $4. Watch what happens. You start with $100, $48 grocery charge, balance goes to $52, fine. $45 gas charge, balance goes to $7, still fine. $12 lunch charge, balance drops to -$5. First overdraft fee, $35. $4 coffee charge, already negative. Second overdraft fee, $35. Same spending, same account. 2 fees instead of 1. $70 instead of $35. Now I want you to pause on that for a second. Think about how many times in the last 2 years you got an overdraft fee and blamed yourself. Maybe you thought, I really need to be more careful. I need to track this better. I need to get my act together. That self-blame, that feeling of financial shame, is extremely useful to the bank because shame keeps you from asking questions. And the question you should have been asking is, did they reorder my transactions? Now you might be thinking, okay, but that's clearly illegal. And this is the part that should keep you up at night. It's not. Wells Fargo paid $203 million in a class action settlement over this exact practice in 2010. Bank of America paid $410 million. TD Bank paid $62 million. And then, in many cases, they kept doing it, because even after the settlements, the practice remained legal. The fines were a cost of doing business. Here's the analogy I want you to sit with. Imagine a parking lot attendant who, right after you park your car, moves it to a no parking zone and then gives you a ticket. You parked legally. They moved your car to make you a criminal. That is transaction reordering. Okay, so you now know that the bank can rearrange your transactions to multiply your fees. Here's the part that I genuinely cannot believe is legal. They also charge you for protection against the very thing they're engineering. In 2010, the Federal Reserve passed a rule that said banks had to get customers to opt into overdraft coverage for debit card transactions. Before that, you were automatically enrolled. After the rule, you had to actively choose it, which sounds like a win for consumers, right? Here's the paradox. The CFPB studied this. Customers who opted into overdraft coverage paid an average of $196 more per year in fees than customers who opted out. $196 for the protection of having your card go through instead of getting declined. Think about that. The product being sold as protection from fees costs you $196 more in fees than not having it. That is not a financial product. That is a financial trap that looks like a financial product. And here's the stat that broke my brain when I found it. The average overdraft transaction in America is for just $24. The average overdraft fee is $26. You borrowed $24, paid it back, plus a $26 fee. Do you know what interest rate that is annualized? 110%. Payday lenders, which are widely considered one of the most predatory financial products in existence, average around 400%. So payday lenders are worse, but banks are charging 110% APR on transactions most people don't even realize were loans, and doing it from buildings with marble lobbies and free lollipops. So look at what the marketing says. Never be embarrassed at the register. We've got you covered. Avoid the awkward declined card moment. They're selling you the anxiety of public embarrassment and charging you nearly $200 a year for that feeling. Some banks have changed this. Capital One eliminated overdraft fees entirely in 2022. Ally Bank did too. A handful of others followed. And in late 2023, the CFPB proposed capping overdraft fees at $8. But if you bank at Chase, Wells Fargo, Bank of America, or US Bank right now, you are very likely paying more for this than you should be, and the system is designed to make sure you don't think too hard about it. Direct question. Right now, do you know whether you're opted in or opted out of overdraft protection? Not whether you remember signing something. Do you know, with certainty, what your current status is? Because I've asked this to a lot of people and almost nobody knows, and I didn't know until I specifically went and looked it up. Here's how to find out in 60 seconds. Open your bank app, go to Account Settings, search for Overdraft. If you're opted in and you haven't thought about this before today, that setting was probably the default when you opened the account, not something you actively chose.
Let me talk about the psychology here for a second because this is genuinely fascinating. There's a concept in behavioral economics called the pain of paying. Every time you spend money, you feel a small psychological sting. Cash causes the most pain. You physically watch money leave your hand. Credit cards cause the least. It's abstract, deferred, doesn't feel real. Debit cards sit in the middle. But here's what banks figured out. If they make the overdraft fee painful enough and separate it far enough in time from the original transaction, you will stop mentally connecting the two. You bought a coffee. 3 days later, you see a $35 charge labeled overdraft fee. Your brain doesn't file those together. The coffee was $5. The fee is just this other thing, this separate annoyance. If the fee showed up as total $40, coffee plus bank penalty, you'd change your behavior immediately. But they label it in confusing language. They delay it, because confused customers are profitable customers. Here's what most people don't realize. Banks have entire teams, data scientists, behavioral economists, UX designers, whose job is to study how account holders interact with their money and then design the interface to maximize fee revenue. The confusing statements, the delayed posting, the vague opt-in language, none of that is accidental. It is the product of serious, expensive, sophisticated research. They know you. They've modeled your behavior, and they've built the system around it. And here's the thing nobody talks about. According to research from the Financial Health Network, people who overdraft regularly are less likely to have an emergency fund. Not because they spend more recklessly than people who don't overdraft, but because they're spending roughly $186 a year on fees that could have been that emergency fund. The overdraft system is designed. Let's run some actual numbers. The average overdraft fee today is $26.61. The average person who overdrafts does so about 7 times a year. 7 times at $26.61 is $186.27 per year. Over 5 years, that's $931, nearly $1,000, just in overdraft fees. Not in the actual overdraft amounts, in the fees on top of the amounts. Now, if you had taken that same $186 per year and put it in an index fund at a historical average return of 7%, after 5 years, you'd have roughly $1,100. After 10 years, almost $2,600. The cost of these fees isn't just the fee, it's the compounding you're not doing with that money. And again, I want to be very clear. This falls hardest on people who are already struggling. If you're in a comfortable financial position, you probably don't overdraft often. But if you're stretching every paycheck, you might overdraft every month. Which means the people who can least afford it are also losing the most in fees and the most in missed investment opportunity. That is how wealth gaps widen, not in dramatic events, in $35 increments, 7 times a year, for a lifetime. So here's something the banking lobby spent $4 million in 6 months trying to prevent you from knowing. In late 2023, the CFPB proposed capping overdraft fees at $8. $8, down from the industry average of $26. The banking industry responded by spending over $4 million lobbying against that cap in less than 6 months. $4 million to protect a $26 fee. That lobbying number tells you exactly how much is at stake for them, and exactly how much leverage you have if you know the right moves. Here's what I want you to actually do. Not someday. This week. And before I give you the list, remember that number I mentioned at the top? 50%. If you have been charged an overdraft fee in the last 12 months, call your bank right now and ask them to reverse it. Literally say, "I'd like to request a courtesy reversal of my most recent overdraft fee." There is no special script. There is no form. You just ask. And according to the data, about half the time, they say yes. Banks would rather give back the $26 than lose the customer. They just count on you never asking. Step 1. Opt out of overdraft coverage right now. Call your bank or go to account settings, search for overdraft, and opt out. Your card will decline instead of going through. A declined card is annoying for 30 seconds. A $26 fee is money you don't get back. Step 2. Set up a low balance alert. Almost every bank app lets you set a push notification when your balance drops below a number you choose. Set it at $100 or $50. That alert is your early warning system. It costs nothing. Step 3. Link a savings account as overdraft protection, not the bank's overdraft service. The bank's service charges you $26 when you go negative. Linking your own savings account means the bank pulls the difference from your savings, sometimes for a $10 transfer fee, sometimes nothing. Either way, dramatically cheaper than $26 per transaction. Step 4. Seriously consider switching banks. Ally, Chime, SoFi, and Capital One 360 all charge 0 overdraft fees. FDIC insured, same as any traditional bank. The process takes about a week. The friction is real, but it's one time. Paying overdraft fees is forever. Step 5. Know your posting schedule. Different banks post transactions at different times. Knowing when your bank processes deposits can help you time transfers to avoid that brief negative window. It's on your bank's website. 10 minutes to look it up. Here's the thing I really want you to take away from this. None of what we talked about today is illegal. The banks will tell you that clearly. They disclose the fees. They gave you the opt-in form. They followed the rules. And technically, they're right. But technically legal is a very different thing from designed for your benefit. The overdraft system in the United States was not built to protect you from financial mistakes. It was built to monetize them. The difference between a bank that charges $26 for an overdraft and one that charges $0 is not that one is generous and one is greedy. It's that one has decided fee revenue is more important than customer trust, and the other hasn't. $7 billion didn't appear out of nowhere. It came from 9% of account holders, the most financially vulnerable 9%, each paying it a few dollars at a time because the system was engineered to extract it. That's not a bug. That's the product. If you're one of the people who's been getting hit by overdraft fees, I want you to know, it is not because you're bad with money. It is because you are inside a system that was specifically designed to collect money from people in your exact situation. You can step out of that system. Today, opt out of overdraft coverage. Set up the balance alert. Call and ask for the reversal. Remember, 50% chance they say yes. And look into switching banks if yours keeps hitting you. And if this video helped you see something you hadn't seen before, hit that subscribe button. Every week we pull back the curtain on one more thing that's technically legal and show you exactly what you can do about it. I'll see you next week.